10 tech IPOs, 5 growth funds, 2 or 3 big secondary funds. What do you think? Can you challenge my numbers? Welcome to the VC React podcast. This is where we break down the latest startup news, VC moves, and investment stories with some of the sharpest minds in the business. It's our last episode of the year, so we're ending the year with exciting stories and bold predictions to set the tone for 2025. Let's jump right in with Aboudi Al-Qattan, principal at Dash Ventures, and Jamil Shinawi, founding partner at Actual VC. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. And as always, from FWDstart, we have my co-host, Jamil. What's happening this week, Jamie?
Yeah, signing off 2024 on a high. Before we actually get into it, we have a schedule, but I'm going to book the schedule for a second because I might just flag, I guess, Elon Musk's latest venture. I know XAI, which obviously has regional backing, so the Qatar Investment Authority are on board. So I think it's reported that they raised $5 billion in funding, valuing XAI, obviously an OpenAI competitor, now at 50 billion. So and I guess the lesson here is if you make a bad purchase in Twitter, all you have to do is start an AI startup, which is now worth $6 billion more than the Twitter acquisition, which I think Fidelity Investments wrote down their investment by something like 79%. I think they're now valuing it at something like 19 billion. So there's a lesson in there for everyone. Just, if something goes awry, AI
I'm not sure,
will bail
man.
you
I'm
out.
not sure. Like OpenAI, they have something, right? They showed that they have results. But X.AI, I don't know. I've never used that yet. I don't know if it's launched or not yet, actually. But $5 billion an investment round. Okay, that's too much.
It's
I'm
pretty
I'm
crazy.
I'm not a huge Elon fan in terms of the fact that I believe he wields too much power and too
Get a
much
club.
influence. But the guy has executed on pretty much all of his crazy
Yeah.
visions. Tesla, for what it is a remarkable company. Twitter, you can say what you want about. I'm not going to call it X. Twitter, you can say what you want about the purchase itself. Probably over leveraged, probably too expensive. But does the app run better now than it did before, at least from a business perspective internally? Apparently it does. If there's someone that's going to rival OpenAI, then it probably would be Elon Musk. But again, not the biggest fan of how he does things.
Yeah, I just looked them up. I went to the website X.AI. It doesn't say that they're launched. It says, hey, try now. I'm trying to try it now. I have to sign up.
Yeah, I think it powers Grok, so the sort of AI communications assistant within Twitter or X itself. I think they are planning apparently to launch a consumer-facing app as well in the near future. But in terms of backers, I mean, pretty much everyone is there from Sequoia, Andreessen, etc. So I think it is an
It's
element
not
of.
always it's not always a good thing. Cap table investing
It's
is the worst
true.
strategy you
It's
could use.
it's
So
it. There's an element of hedging bets here, I think, as much as anything else. Versus I think OpenAI, which he's had less than complimentary things to say about over the course of the last couple of months, which is very rich coming from him. But alas, being very rich is sort of his thing. But look, that's enough of Elon Musk.
Okay.
No more, no more. Let's focus on the region, what really matters. With Iowa, with great news. So Eyewa, Dubai-based eyewear startup, they've raised $100 million in a Series C round, led by General Atlantic, who we've been speaking about for the past couple of weeks. Obviously, they officially opened an office in Riyadh a couple of weeks back. This particular Series C round also participation from Badwa Capital and Turmeric Capital. So this brings the total funding for Iowa now up to $130 million since launching back in 2017. If you're not familiar with Iowa, based in Dubai and Riyadh. I think that the bulk of stores actually are based in Saudi. Sell a range of eyewear products founded back in 2017, as I said, by, I think they're all former Bain consultants. Interestingly, initially entered the market, it was a seller of third-party brands, but they've pivoted, and it's really, really interesting. Like 96% of their revenue now comes from their own in-house brands, which is fascinating and quite uncommon, I would think. So they've declined to disclose specific sales figures, but CEO did confirm that they're profitable, 50% year-over-year revenue growth, planning to launch even 100 stores over the course of the next year. So it'll be interesting to see, I guess, obviously how Eyewa expands over the course of the next couple of years, but also General Atlantic, I think as well, and what their expanded presence in the region, what that will herald.
This is a very significant round. It's called a VC round, but I have a question on that. It's a $100 million Series C. It feels to me like a traditional private equity play more than venture capital. Do you think the line between VC and PE is becoming increasingly blurred in the region, especially with investments in startups that are scaling traditional business models?
You said it, right? It doesn't matter about the round. It matters about the company and what their plans are to do with the round and how they're going to operate. Knowing the founders like I do. So just context, we actually got IC approval for Eyewa at one of the previous rounds. We couldn't do the deal for reasons outside of our control. But if you put any kind of problem in front of Anas and Mahdi, they're going to solve it. They're remarkable founders. They are problem solvers. They're operators. Incredible business. They've done something that is very similar to one of our best performing companies called Missouri, where you essentially do reverse omni-channel. You start with e-commerce, you understand your customer, and then you build stores based on your high-performing customers. And it's incredible to see because in the investment round that we were doing, they were raising to open their first 15 stores. So to see them now have 150 already operational, and actually in Riyadh when I was there last time, seeing the store, it's incredible. These guys are remarkable, honestly. But to answer your question, yeah, I think the line is always going to be blurred, but it goes back to what the company is going to do with the funds and how the company is going to operate, right? If I was still in fast-paced growth mode and opening these 100 stores in the next 2 years or whatever the time frame is, that still renders it a startup, right? Whereas if they take things in a more traditional business approach, then you can call it a private equity round. But it also doesn't matter, right? This is a successful company that's raised a substantial round, and it's very good for the region. And as Jamie said, one of the things that's most impressive about what they've done is that yes, they started by selling third-party brands, but very quickly realized there was a market to develop their own niche tailored to the region sunglasses, where they could control the margins in their distribution and the production, and therefore and command much higher margins. So all in all, remarkable business, remarkable founders, and I have no doubt that they're going to continue to execute.
Jamil, you're a deep tech investor and founder. How do you look at companies like this?
I'm not going to speak about the company because it's not something I understand a lot from a tech perspective, because I don't think the tech element is very little there. But VC and PE, I can tell you that I actually don't believe in benchmarking rounds or the sizes of rounds or even the ABC series and pre and all these namings. I'm against actually conformity in all of the standardization of rounds, despite the insistence of everybody, it's not everybody, but majority of the investors actually want that, because I think it makes their life easier. But it's not for the best, that's for sure. But the difference between VC and PE to me is not even if it's about tech or not. It's very simply, it's an attitude and a risk appetite. To me, it doesn't seem that it is an extremely risky deal right now. The guys did very well, like Aboudi was saying. And maybe in the past it would be VC territory, but maybe, I don't know about their plans as well. So maybe they are actually biting a lot more risk as well. So to be fair, even the news article doesn't show that. We don't know the company that well. But yeah, I agree about the VC-PE lines being blurred. And I honestly don't think, I think it's actually something good, because, PE did create VC, right? At the end of the day, VC is a subset of PE that, is created to actually create assets for PE.
On a higher risk, on a higher risk profile. But Jamil, Jamie mentioned that all of the founders were Bain consultants. How did that help them in creating such a company, especially taking a business from a traditional settings and taking it online and start selling and expanding very quickly?
As Aboudi said, probably they are great founders and they can solve any problem that they're handed over. But yeah, of course, the brand of being a consultant in the Middle East still being a very big success factor to funding. I don't believe that consultants can build better businesses than somebody else. It actually is the opposite, in my opinion. But there is a lot of trust when it comes to investors, to people who are ex-consultants, ex-startups. And I keep telling them, even people who are ex-specific startups, I mean, they have been qualified by the HR of that startup or that company. It doesn't mean that they're going to be better founded, So it's a bit ironic. There is no financial inclusivity in MENA, to be just very honest. And I know it's a very unpopular opinion, but it doesn't exist. Not on gender, not on social strata, not on any level.
But Aboudi, you said you almost invested in them. There wasn't that founder market fit that most VCs look at or look for in
There
seed
was.
stage startups.
There was. No, they actually, they ticked all the boxes. I mean, founder market fit doesn't have to be someone that inherently understands the industry. It has to be someone that knows what they're doing, knows the problem they're solving, and has a clear plan as to why they're solving that problem. For us, again, I'm not going to get into it. It was reasons outside of our control, but in terms of a fit for us and our mandate and everything, no, it's a remarkable company. I think anyone that would have looked at the company at the stage that we looked at it would have invested, right? We were very blessed to get the deal from a good friend of Dash's who gave it to us as the round was closing. And it's a shame that we didn't get to do it, but from the bottom of my heart, I'm happy every single time I hear about a positive update on their end. I think I said this on the last time I was on your podcast. Like, we need more success stories, companies doing well, scaling, exiting, whether it's public markets or acquisition. And just because we didn't do the deal doesn't mean that I hope for the worst. On the contrary, remarkable founders, like I said, and I think I honestly still think this is the tip of the iceberg for them.
I love that. Okay, with $130 million, Eyewa is becoming one of the most funded startups in the region. Let's speculate now. Will it end up in an acquisition or an IPO?
If I had to guess, I have no idea, but if I had to guess, knowing the founders, they're looking to build a brand that acquires other brands, not one that gets acquired. So if there's an exit strategy for them, I think they'd want to go public. I think it would be a very good, successful story out of Saudi. I think having a direct-to-consumer company go public in our region would be very well received. Don't forget that these guys already have 150 stores in Saudi, and they're opening up another 100, which means they have consumer interest and consumer awareness. So those same consumers that are buying their products probably feel a bit of ownership, and they would want to go in and then buy shares in the company. So for me, if I had to guess based on very limited information, I would guess that they're going to probably go public.
Jamil, what do you think?
I noticed that none of you guys wear glasses, but I do, by the way.
I did LASIK.
I've contacts in, so I wear glasses.
Okay. So
We're
as
all
a consumer,
defected.
also, like, honestly, I think Eyewa has a B2B play because as a consumer, it just doesn't come into my start sphere at all. I know about a lot of the different brands, but as a consumer, I just don't know about. It's not something that comes to me to consider, honestly. Not on my marketing online marketing, not on. I mean, I think I spotted one of the shops in the MOE once. So if I had to speculate and be a little bit imaginative, I would say a Meta Ray-Ban play to market entry because they have these new smart glasses, or one of these new smart glasses companies might have a play there to acquire. But again, I don't know the sector. I don't know the company. I just wear glasses.
Okay, so talking about exits and acquisitions, let's move to the next story. Jamie.
Yeah, not a particularly huge acquisition or exit, but it caught the eye for the most part because MEVP were just very transparent in terms of actually reporting on it, which I think is super cool and would love to see more of that. So this relates to you got a gift. So if you ever gotten a digital gift card based in the UAE, you'll have likely have received You Got a Gift. I have myself in the past. So they've sold 91% of its shares to a Japanese gifting company called Gifty. So it's a $26.6 million deal. So just on the exit itself, so this is MEVP's second exit in 2024 after Fresha. So this shows up the DPI of its second fund to 118%. So they were the largest shareholder in You Got a Gift. They owned 44%. They backed the company's expansion to Saudi and the rest of the GCC for the past 10 years. And this is also interestingly, I thought that the second acquisition from an MVP portfolio company to a publicly listed entity in Japan. So Cookpad acquisition of Shaya back in 2014. And this is MVP's fifth exit overall to publicly listed companies. So yeah, would love to see more of this disclosure. I think it'd be great.
Also, it's indicative of how VC funding is shifting away from some sectors as well, because when we see M&A happening this early, it's just an indication of, drying up VC funding in some areas of the market. And notably, if you look at this category specifically, a lot of the small companies actually had to shut down in the region without mentioning any names. I don't know why there was this case of like, there is one or two really good gifting companies and suddenly there are like 100. And I think it's just a cultural thing. And we like there's a lot of people who like us to recreate the success story. I would suggest reading 0 to 1.
Aboudi, what do you think?
I mean, I welcome the announcement for two reasons. One, again, so obviously MEVP, Dash, Beko, some of the oldest VCs in the region, all of us have returned capital to our partners. So for me, it's very exciting to see MEVP continue to execute. We need to, again, be celebrating these things, regardless of whether we are, co-VCs or startups. The other reason I welcome it is because, as Jamil said, it's not a $250 million or $1 billion acquisition. Like we need to stop spreading this like false idea that the only success stories are unicorns or $500 million exits. Like we are trying to make money for our partners, and sometimes that'll be a quick 3 to 5 year exit and a 2x, and sometimes it'll be a failure, and sometimes it'll be a lot more. I think, again, MEVP has set the standard in terms of being transparent. I believe it was last year when they released their Fund 1 results, and some people came out and said, "Oh, they're not that great," and this and that. It's like, why would at the end of the day, they made money for their partners. Okay, yes, it's not the 10x that maybe you associate with the best funds in the US, but we are in an emerging market. Things take longer. MEVP was a first mover in the region, and they still invest outside as well, but they are still focusing on the region. So these things should be met with applause. Obviously, there's still more work to do, and I'm sure the guys at MEVP know that, but for me, this, again, for the reasons of liquidity and for the reasons of demonstrating that there are exits in many different shapes and forms, this was a very positive announcement to read about.
Fully agreed. Let's focus on the startup itself. Deals like this can bring big changes for the local company, like adjusting to a new management style, fitting into a global strategy. How do you think local companies can use the acquirer's resources to grow while still being connected to their roots?
With all due respect to our Japanese beloved brothers and sisters, the business culture in Japan could not be any different from the region here. This seems like an acqui-hire plus. Probably the company has a certain moat, and I'm sure they have a great team. Otherwise, it wouldn't have happened. I mean, it's good for FDI as well, for foreign direct investment, to actually come and acquire a company as a way of soft landing to get into the market. So I think we'll see actually a lot of this next year, because the region is getting hotter in terms of business and purchasing power. There is inflation everywhere. In a lot of places, there is instability everywhere. The region actually is becoming not just a good investor, but also a good business climate.
So in the acquisition or negotiation phase, when you are a company that's getting acquired, like you are already hashing out all these things, right, Ahmed? So for me, like people who maybe aren't familiar with VC, it's not something that happens over the course of a month, right? You don't just approach a company you want to buy and then put together a price and acquire it. Like you are actually fitting and filling out the culture. And that's probably one of the first things you figure out is, can I work with these people? Are there aligned incentives? Is the broader mission the same? So the lesson here is just like, when you get approached to acquire, or when you are approaching to acquire, the most important thing is culture and people. Right? These things can look good on paper, and you can go buy a company for $100 million and add that to your overall enterprise value, and have an entity that's worth more at the end. But if you haven't done the work to align company A and company B, then ultimately it's not going to be a success story. So it's just about making sure that everyone is on the same page and everyone has the same long-term mission.
I'm going to go back to the small acquisitions part. I know a company in the US called Acquire.com. And they sell very small businesses, like 100K to maybe $1 million, $2 million. Are we going to see something like this in the MENA region in the next few years? I mean, yes, we don't have to wait for the $250 or $500 million acquisitions or the unicorn IPOs, the Talabats, the Maktoubs, the Souks.com. But still, would VCs encourage founders to exit that early, build a very small business and get less than 1x? On the dollar?
Why are VCs the one that are in charge of that? If someone wants to start a business and then exit it to make a quick 1.5x, that's up to them, right? At the end of the day, It's
Because
an interesting
they're board
model.
members and they influence the decision, right?
You're saying so the VC is an existing investor in a company like that?
Yeah.
I mean, look, I think, again, this goes back to having open, honest communication from the beginning, right? As a founder in VC, when you engage in business together, the idea is to understand what the goal is, right? If a founder comes to me and tells me my goal is to make 2x in 5 years, then I'm the one that has to decide whether or not I want to be a part of that business. But if I invest knowing that, then when that opportunity arises, you can't be mad at the founder for accepting that deal. I think ultimately, like, this goes back to, again, setting your specific intentions from the very beginning and knowing what it is and why you're building a business. So again, it starts with the founder, right? Does the founder see this enormous opportunity to build a multi-billion-dollar business, or is the founder just trying to make a quick 2-3x? And once those goals are articulated, then from there it's just about finding partners that are aligned with it. So that's why I got a bit jumpy when you said, why is it the VC's responsibility? Because too often it's like, yes, we do give founders money, and yes, we do take board seats, and yes, we have a say in what happens, but ultimately we are giving people money to let them live their dream, and that we just advise along the way, and it shouldn't be the other way around. I told you this in the first podcast. When we invest in a company, at least at Dash, we believe we work for the founders, not the opposite way.
I love that. So Jamil, in Saudi, my expectations from last year were basically saying, hey, there's a lot of family offices interested in the tech scene and tech startups, and I expected to see many small acquisitions this year from family offices. They want to acquire those companies and add them to their holding companies. But we didn't see that much acquisitions. We saw a few, but not that much. And then we saw family offices opening their own VC firms, not even investing in VC funds. What do you think is happening or happened this year?
Just looking at a few companies I advise, and a few family offices also that I advise here in the region. Family offices actually don't want to get into an operation business. Most of them are going into their second generation. They all want to create wealth, manage wealth. The second generation does not want to get into an operating mode. They saw the first generation do it. They actually want to get out of it. So they are trying to actually either be very good LPs and start a fund of fund, or actually go into, okay, I'm going to actually start a VC mode. And I mean, honestly, I like their attitude to it. I do. I mean, the ones I know, at least the ones I've met. And when it comes to acquisitions, actually, there are a lot of mergers being done, especially towards the end of the year. They're not surfacing on the news, but startups merging is a big phenomenon. So I at least know of 18 companies that did that.
You mean consolidating, smaller startups
Yes.
consolidating? Okay.
Yes. And not just smaller ones, like even mid-sized ones that are planning on a, Q1 round. They've been like brewing it, trying to raise. And I know of one startup that actually acquired more than 20 companies in equity swaps only. They're doing very well. They have a really good revenue and bottom line as well. And they're a tech company, GCC based, and they're just going and buying in the market. That is healthy, I believe. They take companies for what they're good at. Sometimes it's a client list, sometimes it's an acqui-hire, sometimes it's a certain moat. And I think that, I mean, I think that's actually better than the family offices acquiring these businesses. Founders usually don't want to say yes. As Aboudi said, like VCs, whenever actually I saw any deal that I was kind of advising on and there was a VC, they actually wanted the founder to go the longer way. They're very patient once they're in. And I mean, yeah, getting acquired is trying to throw in the towel, if you know what I mean. So not all the time, but a lot of the time. But with the merger, with the relevant business, it's just a new era, it's a new dawn, and you're doubling down, you're teaming up with people. So it's a completely different attitude. It suits entrepreneurs a lot more, I believe.
And as Aboudi said, we need to celebrate these smaller acquisitions even more. Would love to learn more about this company, maybe feature them at one point in the future episodes. Jamie, what's next?
Yeah, we've had a spate of sort of VC second fund announcements over the course of kind of the last 2 weeks. So we had Jada Fund of Funds have backed Cedra Ventures. We've had ISSF come out and back Sacker Fund 2, Vision Ventures second fund. But I guess what I'd like to focus on now maybe is actually a new fund. So that's Saudi's MENA Capital. They've launched a $80 million fund and accelerator that's going to be focused on gaming startups in particular. So it's called Excel by Merrick. The goal is to support 15 to 20 gaming startups across the region. So going to be focusing on game development studios, technologies, publishing platforms, etc. I think the goal is to develop something like 15 commercially viable games, create over 120 jobs, etc. There's some interesting stats actually that they had included in the particular press release. So I think they suggested that Saudi's gaming market boasts over 24 million gamers, which accounts for 67% of the population. I'd love to know exactly how what to qualify as a gamer necessarily in terms of, but look, I mean, maybe give them a pass on that. Maybe we'll scrutinize that a bit further. But something that did catch the eye was Saudi gamers spend 1.4x more than US gamers, 2.9x more than average MENA gamer. We've seen a lot of activity in the esports arena as well. Obviously, the World Cup that took place in Riyadh over the summer. So Saudi really is emerging as this sort of gaming hub. So it does make sense, this sort of alignment and MENA Capital venturing into this. So it'd be interesting what actually comes out of it.
Let's talk gaming. In the ICT forum and the Dead Sea area in Jordan, I met a very interesting pre-Series A gaming company. I was so excited about them and I wanted to connect them to a few VCs, sector agnostic VCs. And they said, hey, we're shying away from gaming right now. Why? What's happening? Aboudi, do you invest in gaming company, esports?
So a couple things. Number one, I long have believed that our region is not ready for industry specific funds because there's an opportunity across multiple different industries at the moment, and I don't think we have enough sector experts to even justify industry specific funds. That said, gaming for me is a very different approach because even though the fund MENA Capital has set up, I actually think they're going to be following the consumer in this space. So we do have, what I mean by that is we have a plethora of opportunities in gaming in the region, not only in Saudi, but also here in Jordan. There is a remarkable gaming infrastructure, esports and typical gaming. And I think because this is an industry that's being driven by those who are actually in the industry, right? The gamers themselves, it makes sense to start a fund, but to do so in a way where it's like, you know, that you're going to be working collaboratively with the people you're investing in because they're the ones that understand the space more than anything else, right? So that's number one. Number two, we have looked at gaming startups. I wouldn't say we're shying away from it. What I will say is that esports in general, and this is not very talked about enough, but esports and gaming in general was one of the most overhyped industries during COVID. And then for lack of better words, it ate a bunch of shit, right? Chess.com, I think, is one of the only games that ended up sustaining proper monetization from the beginning up until the end, right? And that's not even typical gaming when you think about it, right? We're talking about like, PUBG and COD and all that stuff. So the industry took a hit, but again, the only reason it was ever put on a pedestal was because investors jumped the gun and threw a bunch of money at companies without really fully understanding it. And I think we've seen that trend play out over the past couple of years in a couple of different industries. I think gaming is here to stay. I think at the end of the day, we have a population across the region that is very gaming native, right? A lot of my friends here in Jordan grew up playing games and are very high level gamers. And I think because of that, because the actual infrastructure and the ecosystem is at a high level, it makes sense that investment would then follow. I can't claim to understand gaming on a deep technical level when it comes to investing in games. I definitely don't. But in terms of why investors would maybe say there's a turn down or staying away from gaming, it's because the trends that I mentioned earlier are very much prevalent around the world, right? Companies got overfunded, esports teams got overfunded. There wasn't as much demand as people thought, and those companies ended up failing. But that does not mean there's not an opportunity, because I read the announcement and I thought this fund's probably going to do very well.
We invest in infrastructure that supports gaming because we see gaming as a really good risk management strategy for a lot of the companies we invest in. So like we invest in, companies that make very specialized types of databases to, target specific gamers to protect their artifacts, they're tamper-proof, you can't hack them, stuff like that. We've seen a lot of different, gaming mechanics and a lot of amazing algorithms and algorithmic development being developed in gaming that is applicable to other fields as well. So that is where I brush my shoulders like with gaming, but I agree with Aboudi about like going sector specific. And I believe the B2C area is the highest risk area with the least return right now. although we have a huge audience, I think the 26 million number includes people who like to play card games on their mobiles. I really do believe that because that is the majority of the market. I don't know anybody in Saudi who doesn't actually play, Joker or something. Everybody's playing these games. And finally, I'll say that when you look at game development in the Middle East, it's completely underrepresented. But a lot of the countries, especially the ones with sanctions, are actually contributing to the largest game publishers. But it's just kept under the wraps. And the cost of development right now in the Middle East is probably the lowest in the world, like just probably second lowest after something like Belarus, which also has sanctions. The gaming industry does know about this, and it is kind of a struggle. But if you look at most of the top most wanted games on Steam, they're typically actually coming from places like Iran, Lebanon, here in the region. They open up studios. They try to take these games there. I personally know a lot of studios, a lot of developers, and a lot of great animators. The combination of people who can, write a plot, do animation, do all these games, develop code, that is not easy. And game development is not an easy exercise. The most interesting thing is not only games, but the cousin of games, which is animation and anime, non-Japanese anime. Some of the best animators in the world are actually here in the Middle East. I mean, I don't know if you know this, but Rick and Morty actually more than 60% is being drawn from this region.
No way. That's
Yeah.
crazy.
Yeah.
That's cool.
Okay, so let's talk about the VC funds now. We have two big VC funds announcements. Sucker Fund 2 from Vision Ventures, $90 million seed and pre-seed. And we have this gaming fund, specialized gaming fund, $81.5 million. Those are two big funds compared to what we have traditionally in the region. Are we going to continue seeing this trend next year? How do you see 2025 in the VC scene? Are we going to have more big funds, specialized or non-specialized, or maybe bigger funds within the fund itself or the firm? We will have specialized funds. Like, for example, in A16Z, they have a crypto or Web3 fund, and they have a gaming fund. They have other funds, and then they have, of course, the sector agnostic main fund. What do you think we will see in 2025? Speculate.
I think it depends on the exits again, right? If we start to see that companies like Talabat, for example, that we all know is going public, if we start to see that companies can go public and there's demand for those shares on a consumer level, and that these companies go public and actually continue to grow, then what that shows people is that there are multiple paths to exit in our region, not just waiting for companies to come get acquired. And that will drive interest on a wider level, and then funds will continue to pop up. It's great to see a $90 million seed fund and pre-seed fund, honestly, but at the end of the day, we have a plethora of those. For me, what I want to see is growth funds. We need growth funds. We need 300 million, 400 million, big funds that are coming in and taking Series C and Series D checks. Obviously, that's why General Atlantic is the one that's leading this round with Eyewa, because we actually don't have as many later stage funds here in the region. So obviously, I welcome access to funds, and on the contrary, like having a $90 million seed fund means that some startups are going to get opportunities, and we're going to see again just a wave of new, innovative, younger startups coming in and trying to get from 0 to 1, as Jamil referenced earlier. But ultimately, the only way our ecosystem will become sustainable and will breed consistent exits is if there's access to later stage funding, or if companies go public and there's demand on a consumer level. So my prediction for 2025, honestly, is that a lot of the companies that are lining up to go public will go public. I think given the general trends in Saudi, I think these companies will do well. So I think there will be more fund announcements in 2025, as well as success stories from initial public offerings. The question then becomes into 2026, are these companies that are going public, is there consistent demand and is there consistent growth on a long-term level? And I'm not going to make a prediction on that because who knows what's going to happen in 2 years.
I'm going to just add by saying I really see a lot of the angels in the region becoming VCs. A lot of them are passionate about what they invested in before and has performed well. So I expect a natural evolution of some growth funds, not necessarily all big. I'd like to draw that parallel to how we admired the small exit of the gifting company at FWDstart. You got a gift, I think it's called. I think micro funds are actually a lot more important sometimes than bigger ones. Even micro funds, I mean, it's relative. A micro fund, even on a growth stage, it might seem big, but it's actually a micro fund. I believe early stage, we have a good number of early stage funds, but like we don't have anything in growth. What I really wish for as well is a little bit more CVC into growth, because so far most of the CVC that we've seen in the region is just focused on scouting for M&A almost, but then there isn't much M&A activity happening because the market is quite nascent. There aren't many companies, so you can actually be, the second class kind of competitor. So you get acquired by, a corporate. And I don't know, like when it comes to funds, this direction of angels becoming VCs has been led largely by Jada actually and Sanabil. And they have been doing a lot of education, a lot of funding, and a lot of support in that direction. And I think that's one of the reasons why we see a lot of it. But QIA is also doing something similar. They have a lot of programs in that. The Biofuturistic Fund has been doing a lot of that as well. You can see all the programs, the certification, the courses, and the fund of funds and their mandates. It seems to be a very strong direction into the next year, I believe. So that's one. And the second and last point, I know you might disagree about this, Aboudi, based on what you said earlier about industry focus, but I agree about the industry focus. Industry focus fund is not really something we should be looking at right now, but I think we have also too many opportunistic funds, and we are also out of that phase. Do you agree?
I agree.
Yeah?
I think that's fair,
Yeah.
which is funny because that essentially means that what I said earlier, I'm contradicting, right? But I do agree that there are too many sort of like, I think opportunistic is the correct word, right? You've got people that'll say, oh, we'll look at this, but not this, or oh, we'll do that, but not that. And it's kind of based on feeling and not very much thesis building. So in that sense, I definitely agree.
Yeah, I mean, I agree with you about the sector bit as well. Like we shouldn't have a sector focused fund. I agree about that. But like thesis, I think you coined it very well. So yeah, but we need maturity in a thesis. We need some focus and some philosophy in the way we're approaching it. And I really hope that we see a lot of that next year. I really do. Yeah, Dash is a good example of this actually. Like the guys have done it well.
I wrote a blog post a few days ago saying every VC should share with everyone publicly what are the ideas or concepts or sectors they want to invest in, they want to help scale. For me, this is an invitation for, hey, I'm excited about these things. I understand them. I want to help contribute in building that future. Please come join us in building this. If you are working on something similar, let us know. And many VC firms are doing this, accelerators and VC firms. And the biggest example, of course, is Y Combinator request for startups. Anyway, Jamie, what do you think will happen in 2025?
It's a good question. I think the Talabat IPO, I think, is so important from the perspective of IPOs in 2025. And I know it seems pretty bullish. I know Delivery Hero have come out yesterday and they're increasing the amount that they're offloading from 15 to 20%. It
got scooped up in literally the first day it was all done. Yeah, it's crazy.
In minutes. So I think that's strong. I saw the CEO of Delivery Hero posted to LinkedIn last night that, he was actually trying to claim that the biggest tech IPO in the world was happening in Europe this year. I mean, I'm not quite so sure. But yeah, I think it's all contingent on that to a certain extent as to whether the Dubai financial market can support that. I mean, all indicators seem to suggest that it will be able to. And then obviously, we have Tawadul and Saudi in 2025. I think you're going to see a couple of IPOs there, I would think. But look, I think it's super exciting. I think it feels like we're sort of on the precipice of something. I think that's how I would describe it. And hopefully, this sets us up well heading into the new year.
For me, I think VC markets are always ups and downs. I don't think we reached the peak in MENA, or especially in Saudi yet. I think 2025 might be the peak. I hope it extends for many years, but this is the market cycles, nature. But in 2025, I think we will see. Let me give numbers so that you can quote me on these next year. I think there will be at least 10 tech IPOs in the region. 10. Because the Talabat IPO will create a chain effect, chain reaction. I think we will have at least 5 big growth VC funds. And something that we didn't talk about today is secondary funds. I think we will have at least 2 or 3 big secondary funds that would help clean up cap tables, provide exit for very early investors or maybe angel investors. And I know that SVC have spoken about this publicly, that they are looking for secondary VC funds to invest in. So I think that would be for me, this is how I see 2025.
On the growth stage, Ahmed, do you think that's going to come internally from the region itself in terms of new VC funds? Will it be, foreign entrants to the landscape?
Both. I think it will be both, mainly outside capital, but both will contribute to that, of course. Yeah.
Okay. Well, maybe we'll segue with that in mind into some new market entrants as well, who've raised funding and are targeting the region. So we have 2. One of them is Water Cycle Technologies, which makes sense. Obviously, there's a lack of water, clean fresh water here. So this particular company focuses on low-cost, high-yield mineral recovery systems. So obviously, there's an element of desalination in this from brine water, but they also do something interesting, which is battery recycling too. Obviously, I think for the most part here, what lends itself best is on the water desalination front. So they've raised 5.6 million Series A, and apparently they're in discussion or in negotiations with some bodies here within the region to implement that mineral recovery in seawater desalination. And the other startup then is Locad, Singapore-based. They're active in the logistics side of things. So they've raised a 9 million Series B. This was led by Global Ventures. So they're going to be looking to enter the UAE and Saudi, which obviously are, both consumer logistic supply chain hubs. And obviously provide a good vantage point in terms of East beats West. In terms of what they do, it's an asset light logistics engine. So it includes warehousing, fulfillment, last mile delivery, etc. So it takes care of that for brands. Those are the 2 new startups.
I don't want to get into the details of these companies, but I have a very general question about this. It seems that the region is becoming a hub for international startups. Global investors and founders are looking at this region. How can we keep this momentum, and what factors can help these international comers succeed or fail in our region?
If you look at these 2 companies, logistics is an area that we are still struggling with in MENA on the ground. I mean, not as an investment or as a startup sector. And that just boils down to infrastructure, addressing systems, and, most of the tech that actually is integrated to these systems have not been made for MENA. It's been made for North America, for Europe, and even not very well for Europe. So there is always a challenge, and we're trying to bring in more talent that has solved these issues, like in Asia, for example, or in Africa. And if you look at the second company, so there is a big market here for likeness of issues to solve. And let's face it, as Jamie was saying about the water company, like, who needs water more than us? We literally live in a desert, so it's just a natural market, if you know what I mean. So I see a huge number of companies coming here in energy transition, in material science, and water technologies, and all of these are things where we have huge amount of infrastructure and skill set for, or a huge market. I mean, in our fund, we've been investing in material science, and whatever companies have been doing in their home markets in Europe, in US, in Asia, in Africa, and Australia, they come here. They actually, what they do in 3 months, they say that they have been spending 2 or 3 years doing back home. The market is extremely dynamic. There is hunger for such companies, especially material science that, is software-based and software-led. That is a huge gap that we are very excited about in the region. So I see more companies coming, and I think that could drag more outside capital to the region as well.
So Jamil, you think they're coming because of specific sectors and problems we need solutions for, and they're coming to help in providing those products and services that would solve these problems. Aboudi, what do you think? A lot of international investors and founders are looking at the region, coming to the region. How can we keep this momentum? What can we do to ruin this so that we can avoid it?
So number one, before I speak about the more general question, given the topic of water scarcity, I need to shout out a phenomenal company that I actually met with this morning called Aquaporo, also trying to solve the water scarcity problem here in Jordan in the region. Really, really great founders, technically very capable, and they've actually built multiple products, a large one and a small one, that are essentially turning humidity into water. I mean, it's insane. So just on that note, let's give flowers to local champions. In terms of what we can do to support people coming over from the west or from the east, I think our region has a lot of problems that need solving with innovative solutions like water scarcity. So if we're going to encourage founders to come and set up here to solve those problems, then we better put in place subsidies and initiatives that allow them to thrive. I think one of the worst things that can happen is that we can encourage founders to come to the region, and then they get here and they have an experience that, bureaucracy or things moving slower in our region make them realize that even though the problems are and the opportunities are immense here, if the larger powers at play are not encouraging people to solve these solutions in an innovative manner, then it's going to end up doing exactly what you said and discouraging people to come to our region. So very, very obviously a lot easier said than done. I'm not a government guy, I'm not a political guy, but at the end of the day, like when we have immense opportunity, not only in water scarcity, but in renewable energy and anything to do with deep tech or the future of where our world is going, which we do have in our region, right? The opportunities are huge. It just means that those who are in charge of creating initiatives that, empower businesses need to make sure they're doing so in a way that allows people to be innovative and to move quickly and to solve problems and to mess up, but then to get up and try again.
What would be the one thing that would make next year for you? What are you looking forward to? I will start. I know I don't like politicizing the episodes, but I added this map today because I hope that next year, by January next year, when we restart the podcast, the war or the genocide will be stopped in Gaza, and we would look for a better future in Palestine. I am a Palestinian, Jordanian, American, so I hold multiple nationalities, but Palestine is always in the heart. I know we're not doing much, but at least we can talk about this.
There's nothing I could say after that would be anywhere near as important as that. So I'm gonna jump on your bandwagon and be very honest that the only reason I do anything I do, whether it's my podcast or VC, is to be successful and to have a voice and to turn it back to Palestine. So we're aligned.
I echo your sentiment, Aboudi. I mean, yes, I really hope for peace in Gaza and everywhere as well, where there is instability. Humanity deserves better. In the industry, it's what we all spoke about today. I really hope to see some growth stage and some good exits. I don't care if it's M&A or IPO, but I really am very bullish about the region. I really think the region will be the capital of tech and VC globally. And I think Abu Dhabi Finance Week is next week. Jeddah Finance Week was this week, and things are changing.
They are. And let me repeat the numbers for next year so that we can compare at the end of next year, in maybe November or December 2025. 10 tech IPOs, 5 growth funds, 2 or 3 big secondary funds. What do you think? Can you challenge my numbers?
I think the IPO shout is fair. If anything, I would have said a little bit higher. I think I'd be happy with 3 growth funds to start. Okay. But if we got to 5, that'd be excellent.
I mean, growth funds, I think, could be more. That's the only comment I have because I already know about 3. 1 is public and 2 are under the wraps. One of them is $1 billion secondary fund, actually, out of Saudi.
Okay. $1 billion secondary fund.
$1 billion secondary fund out of Saudi. Wow. They haven't closed fully, but they have secured almost 40% of the amount.
Wow. Okay. That's huge.
I'm not affiliated.
That's exclusive. Yeah. Well, with this big news, let's end 2024 and the VC React podcast. Thank you so much, Aboudi and Jamil. And Jamie, always thank you for bringing us all this news.
Not at all. Thank you
See
so
you
much.
next year.
Thank you. Thank
Wish
you
you
for
many
what you
returns,
do.
gentlemen.